Do you think realtors make too much money? Have you ever thought what a realtor actually makes on a deal? Well, we're about to go pocket watching because I'm going to break down the commission on this check I have right here for a $200,000 home here in the Dallas Fort Worth market. And I picked this exact number and this exact house for a very specific reason. So, in today's episode, we're going to break down what money actually hit my pockets, the value, if any, because we're just glorified door openers that I bought to my client, and talk about what will potentially happen if my client would have to pay for my services now out of pocket. If this is your first time hearing the sound of my voice, my name is David. I have a background in mortgage underwriting, a background in mortgage lending, and also as a realtor. So, yes, if you're keeping track, that is the entire home buying process. I've also purchased multiple homes on my own, but most importantly, I've helped hundreds of people just like you buy their first home in real life. I don't just talk about it on the internet. Let's go get those keys. Welcome back to House Rich, the first time homebuyer show, where we provide you actionable steps to buy your first home in layman terms. Let's jump right into this commission check. I picked this home, as I mentioned, for a very specific reason. It was a single lady, first time homebuyer, first generation homebuyer, and her income was under the area median income in the Dallas market because I think that's the person that could be most impacted negatively by potentially having to pay their realtor's commission. Before I tell you what I made, I want you to guess what I made. $200,000 home, the money that hit my pocket. Three, two, one. What number did you come up with? I'm guessing it was maybe 12,000. Was it 6,000? Did you back out taxes and think like $4,200? All of those were wrong. All of those were high. The actual number is $2,415, which is roughly about 1% of the sales price of the home. Let's talk about how we get to that number. Purchase price $200,000. Typical commission on a home for the seller's agent is 6%, and they split that between the seller's agent and the buyer's agent. However, believe it or not, commissions are negotiable. So the commission split on this started at 5%. So my portion of the pie was 2.5%. So 2.5% of $200,000 is $5,000. That $5,000, of course, does not hit my pocket. As a realtor, you work under a broker. So everyone likes to point out that, realtors, you can get your license in like 2, 3 weeks or something like that. It took me about 3 months working another job to get my real estate license. However, you work under a broker who, in the state of Texas, has to have been a realtor for at least 4 years, and they go through more education, more training, and they have more responsibility. They're responsible for every single broker at the brokerage. If you ever look at a real estate contract, you'll see your realtor's name, and you'll also see that broker's name on the contract as well, because they're responsible for the good and the bad. Like if I were to go out and scam you or do something unethical, you could of course come after me and my license, but more importantly, you can go after my broker who has the deeper pockets and will have the money to compensate you, whether I do something unethical or just make a dumb mistake that I should have known better and it costs you from a negative aspect. So there are various brokerage splits between, like, I've seen 50 on the low end and 90%, 95% on the high end for what that agent keeps. In this scenario, the brokerage split was 70% for me, 30% for my broker. So 70% of $5,000 comes out to $3,500. Now, we have to have some sort of insurance on each deal. Honestly, I don't really understand it, but another $50 came out of my check. So the number you'll see on this check is $3,450. But I mentioned the number that hit my pocket was $2,415. How do we get so low? Well, because as a independent contractor, taxes do not come directly out of your check. So I put another 30% aside, which takes me down to $2,415 is the money that hit my pocket. That's perfectly fine, and that's an understood part of the job. But that's one thing that folks aren't factoring in when they're talking about how much realtors make. Now, before I get to the value add that I brought to my client, it was literally a tangible $6,000, coincidentally, the same amount as her down payment, plus a bunch of other items. I want to talk about the scenario where she would have to pay out of pocket for my representation. one, I think everyone can agree that there's probably not a realistic scenario where a buyer is coming out of pocket 3% to pay the buyer's agent. So let's say, capitalism, market, water finds the lowest level, etc. And it comes down to 1%, because I think that's everybody's fantastical scenario. Well, let's do the same math if I was earning 1% for this deal. And I want you to think, would you have done this deal yourself? I'm a realtor in Dallas and would love to help you reach your goals of home ownership. So click the link in the description and just schedule a call no matter where you are on your journey. Not in Dallas? No worries, I can help connect you with a vetted realtor in your local jurisdiction as well. And feel free to share with friends, family, and foes. Everyone gets left. 1%, $2,000. 70% commission split, I'm seeing $1,400. Let's back out another $50 for insurance. We're at $1,350, and then another 30% for taxes. We're at $945. Excuse me, the opportunity to make $945. Let's say you're the best realtor on the planet and you close 50% of the deals of people you interact with. That is a 50% shot at making $945 after 40 to 50 hours of work. Would you do that? Realistically, just being honest, I would not engage in that activity. And here's the thing, I'm not discriminating because I'm a private contractor, right? I'm choosing to do or not do a deal in this hypothetical scenario based on the income or what I value my time is worth. But it comes out as a discriminatory result, right? Because the people that are going to be disproportionately affected are the lower income folks, and most likely those are going to be minorities. And so that's going to increase the wealth gap because they're not going to get the same representation that I gave this client at 1% rate. Let's talk about that representation. Just because of my background, after consulting with my client and her breaking me an FHA loan and figuring out her credit was in the high 700s, I was like, how about we go back to the lender and ask them why they didn't give you a conventional loan and see if they can give you a conventional loan. I can jump in if need be. She went back to the lender. Magically, a conventional loan popped up. The benefit of that is twofold. One, your down payment is smaller. It's 3% conventional versus 3.5% for FHA. Also, you're not paying the upfront mortgage insurance, which is 1.75% of the loan amount for an FHA loan. And also, conventional loans are just looked at as higher quality loans in today's and tomorrow's market, and that loan is more likely to be accepted. Next, because I'm familiar with the market, I knew based on the census tract we were in that this home was probably eligible for some money from some bank's Community Reinvestment Act. I reached out to some lenders and found a lender that will give her $5,000 towards her closing costs. This Community Reinvestment Act is money from a whole different pot to make up for redlining and discrimination in the past. It has no impact on interest rates. It's a forgivable loan at closing. Like, you could literally close a loan on Monday and for some reason sell the home on Tuesday, and you would not owe the lender back that $5,000. So we have the $5,000 lender credit, and then we have the 0.5% I saved her on the down payment. By the way, she chose not to use the $5,000 lender credit just because she didn't want to go with the lender. Hey, that's her prerogative. I asked her once when we got a prequal, and I asked her the second time we went under contract, but I do not steer anybody anywhere they want to go, even if it's $5,000 that they're leaving on the table. But hey, I still count that towards the value I brought to the client. Now, let's talk about the value of the home. $200,000. This is less than, or this is about half of the median home price in Dallas, which is a $400,000 home. So, in order for a home to be valued at this, typically there's one of two things, often two things. The home has to be down bad, maybe in a little bit of rough shape, and then two, it also has to be in an area that may be a little bit down bad, and the area may be in rough shape. This home itself was in a not the best shape, but it still was in shape to make it eligible for a loan. And that's very important because knowing what type of homes are eligible for a loan and not will save you money as well. Because when you go through the home buying process, and this person was actually out of town, so I was doing like video walkthroughs for things you would have noticed are things, especially in this low price bracket, that will immediately disqualify a loan from financing. So One thing I was looking at her was, hey, we want to make sure we're looking at, or when I would take my videos, excuse me, I was like, hey, I want to focus on these cracks. I want you to look at these cracks in the window or the foundation. Now, I'm not a structural engineer. I can't tell you if there's foundation issues or not just by looking at it. Not even a structural engineer can do it. They got to do some tests. But I can tell you what's going to happen. We're going to go under contract. You're going to pay earnest money. Then you're also going to pay option money to hold the home for 7 to 5 days to do your inspection. You're going to pay an inspector to do an inspection. You're going to pay $400 to the inspector. You're going to pay about $200 in option money. That is money you cannot get back if you choose to back out of the property during the option period. So, knowing something as simple as, hey, this home has a bunch of cracks, and most likely the inspector is going to say it has a bunch of cracks and refer you to a structural engineer, it's probably not even worth putting an offer in the home and losing that $600 between those two parties. You do get the earnest money back. Let's talk about the inspection on this property that we went under contract on. They were about 50 to 60 items that the inspector noted on the property. Now, when you look at an inspection report, the inspector is not going to tell you this is good or bad. He's just saying, hey, these are potential issues with the property. You can choose to move forward or not move forward. There's not like a way to fail an inspection, but there are certain things that you probably should get fixed. So we sent back to the seller 40 items. They were like, hey, we need these 40 items corrected if you want us to purchase the home and move forward with the transaction. And so a little bit of back and forth, and they ended up agreeing to fix about 35 of those items, and we moved forward with the transaction. But imagine if this young lady was going to this entire process herself, not knowing which homes to put an offer on, not put an offer on, losing option money, losing money for the home inspection, potentially going too far down the line and losing earnest money as well, or maybe even buying a home that has a bunch of issues that are going to be issues down the line because you didn't know what to ask for and what not to ask for as far as the inspection. So I think that's something that folks need to think about when they're like, hey, the buyer's agent should be working for X amount of money. You're going to lose a lot of quality realtors who just honestly their time is not worth the effort that they're putting into the transaction. And also from a first time home buyer perspective, you're currently paying zero right now, so that cost of the transaction can only go up. Of course, there are going to be scenarios where, hey, you look on Zillow, you find the property, the realtor shows it for you, they open the door, everything is good with the home. Those are examples where, hey, maybe you didn't potentially need a realtor in that scenario. But here's the thing, you don't need a realtor until you need a realtor. You don't know what you don't know. But let me know what you think about this episode. Are realtors making too much money? But as always, buy land. Rumor has it they're not making any more of it.